Alright, I'm starting with $100 and flipping it into 1,000 trading stock options, specifically swing trading stock options. So now that it's past 3 o'clock and we're officially in power hour, which is the last hour of markets open, 3 to 4. Now that we're in power hour, I'm going to run through my watch list and look for a good setup. And then when I find a good setup, I will come back in and then record me jumping in the trade. And then when I exit the trade, I'll record me exiting the trade, and I'll have the full entry and exit on video so you can see how it went. So I'm gonna go scan for a good setup right now. Okay, it took me a minute, but I found a play that I like here. I'm looking at Verizon. The moving averages that I'm using here are the EMA 15, so the exponential moving average for the 15-day, the MA 50 and the MA 180, so the simple moving average for the 50 and for the 180 day. So as you can see, price has been respecting this 15-day. It's been stuck under it for a while, probed above it a little bit, but it's been respecting this 15-day. It's been respecting the 50-day as well, and as you can see, twice here it tried to cross the 50 and got rejected hard, and now it's on a downward move. It's pretty clear. Scrolling back, you can see not long ago when it broke down, it went all the way to the 150 day and then the 180 day. Pretty clean move down. So I'm thinking that this is heading back down to this right here, back down to this 180 day moving average. So I'd be looking to play this down to there. Looking at the next chart up, the daily chart at a glance, I can see also it just dropped below this 15-day. It was respecting it for the most part, and it just dropped below it. We've got a bearish signal here as well, a hanging man candle, but that's already kind of happened in the next few days. But either way, it just dropped below the 15, so I'm looking for it to go down to the 50 on the daily, down here in the 38.60 range. On the 4 hour, that would be the 180, down here in the 39 range. So I like that. On the 1 hour chart, you can see that it started to drop. Right now it's at a little pullback, but I don't really think that it's gonna go any higher than this point. I don't think it's gonna break this 4120 area before it gets rejected and heads back down, if it even does. You can see as we speak it's kind of pushing back down, but mainly I just like to look at the 4 hour. Let me make that even bigger. So looking at the 4 hour, I can see that this thing is looking like it's on a downtrend, right? It's looking like a kind of like a break of pattern. Like it was going up, it was bullish, it was bullish, it was bullish. Then it U-turned right around here, stopped respecting the 15-day, fell below that, then fell below the 50. So it's looking like a break of pattern. Like it was bullish, and now it switched to bearish. So it looks like it's going to drop down to the 180. Is what I'm thinking. So if I was to jump in this, it would be a put. I'd like to get at least 2 weeks out on the contract. If I could, I'd prefer to get at least 2 weeks out. If I think this is going to take, like, personally, I think this is going to take, like, probably 3 days to make this move, 3 to 4 days. So I would take 3 times it by 3, that'd be 9, but it might take 4 days, honestly. So 4 times 3 would be 12. So I'd like to get at least 12 days, at least 2 weeks out on the contract if I could. So let me look at these 17-day out contracts, see if they're affordable with $100. Let's see, 4150 put would be in the money, so I could get an in the money put with over 2 weeks time on it for 100. I like that. The spread's only 4 cents, so that's a decent spread too. I like that a lot. I don't like spreads more than $10, so I don't like when the buy and ask price is more than $10 apart. I don't like a spread of more than $10 because then I'm losing money just getting filled and just getting in and out of the trade. Chance of being in the money, 61%. That's a good chance. I like that. Data 0.01, super low because I have, more than 2 weeks on the contract before it expires, so the time decay is super low. Delta's 0.5, that's solid, so the contract changes pretty good as the price of the stock changes per dollar. You know what I mean? Implied volatility 16%, open interest 2, open interest in the call 19. That's the only thing I don't like. Volume 2, so only couple of these were traded today. So that's the only negative about this contract. Let me look at the next, let's see. I would like to get the 42 because that has a lot more open interest, as you can see, but it's just slightly out of the range of what I can afford right now with this much money. Let me look here. Let's see if I drop down to a 10-day, because like I said, this move could happen in 3 days. So if I triple that, that's 9. So the minimum I think I need on this is 9. So I could get a 10-day out contract. 41.50 would be in the money. The spread's only 4 cents. I like that. Chance of being in the money on this 41.50 contract is 64%. Theta, the time decay is 0.02. Time decay is super low because I have 10 days on the contract. That's good. Delta's 0.6, so the contract changes by a lot as the price of the contract, the price of the stock changes per dollar. So every time the stock price changes per dollar, the contract's $63 more valuable. So I like that. Implied volatility 17%, open interest 4,495, 531 in the call. So I like that a lot better because a lot more people think that this is going to drop in the next 10 days than go up. 4,500 people are in the put expecting the downward move. 500 people are in the call expecting the upward move. So I like that. Volume's 378 contracts traded. I like it. So this is looking good. I like this 41.50 put with 10 days out on it. So all I have to do is pop over to check this. I can test this trade real quick before I get in. And the way I would do it is, first I would set my stop loss because that's the most important thing, right? Where would I get out if this didn't go my way? I would like to give this thing a little bit of room to breathe because as you can see here, last time it tested this area twice and then got rejected. So I'd like to set the stop loss just above these rejections. So right here at 42.16. So I give it some room to breathe and go back down if it were to turn around on me. But if it broke past that point, that's where I would be looking to get out. And I'd be looking to ride it down to the 180 day because you can see it hit it not that long ago. So I could definitely see this going to right here, 39.20, right? So my stop loss would be 42.15, let's just say. Take profit would be 39.20, right? And that would be on a 10-day out contract that expires on the 16th. So I can come over here to options profit calculator, which is just optionsprofitcalculator.com. I can go to long put, which is just a naked put, which just means just a single put, playing it to the downside. I put in the symbol, this ticker symbol, which is VZ. It loads up the current price. I'll just double check that. It's 41.05. It says 41.02, so let me just smash that one more time. Yeah, okay, whatever, close enough. And then I would go to let's see, I'd be buying a put, that would I say was 16th? It would be, yes, February 16th. So I would go to February 16th. That's 10 days out. Strike price on the put that I'd be buying, that would be, what did I say, 41.50. So I would go 41.50, and I would click on the put right here. Okay, so February 16th, 41.50 put. Price per option 69. Let's see if that's right. Yes, because that's pretty much the ask. Let's just say I pay the ask, so let's change that to 70. If I get the worst fill and I get the high-end price, it's only 70, right? So one contract is 70. All right, so I come here to stock price range, and I put in my loss, which would be 42.20, and my gain, which would be 39.20. Let's just round. So 42.20. So 39.20 to 42.20. Okay, that's the range that I think the price is going to be in the next 10 days, really next few days. So let me hit calculate on that, and I can see entry cost, max risk, max return, break even at expiry, probability of profit 42%. Then I can say, okay, if I'm in this put and it goes to 42.20, how much will I lose? So let's say 3 days from now, February 9th, if it's at 42.20 on the 9th, 3 days from now, if I hit my stop loss, that's negative 57. So I'd be down $57 3 days from now if it hits my stop loss. If it's 4 days from now and it hits my stop loss at 42.20, I'd be at 59. So my risk is, say, $59. If this goes up to my stop loss in the next 4 days, I lose $59. Now, how much would I make if it goes down to 39.20 in the next 4 days? Well, let's look. 39.20. All right. So if it's the 9th, the 6th, 7th, 8th, 9th, the fourth one over, which would be 3 days from now, I'd make 157. If it's the fourth day, I'd make 157. So let's just say worst case scenario, this trade takes, I'm saying 3 or 4 days. I really think 3 days. So let's say 3 days, this trade pans out. And if I'm right, I'll be at 157. All right. If 3 days from now I'm wrong, I'll be at 57. So that's a good trade. You can see I'd be risking $57 to potentially make $157. So that's a solid trade. I like a 2-to-1 risk reward ratio. So just round both numbers and say it's 50 and 150. If I'm wrong, I lose 50. If I'm right, I make 150. So I'm happy if I can have a 1-to-2 risk to reward ratio. If I can potentially lose 50 to potentially make 100, I'm happy. And this trade presents a possibility to lose 50 or make 150. So this is a solid trade in my mind. So this is something I definitely want to jump in. So I'm going to go over to options, 10-day out. Like I said, I think the move's going to happen in 3 days in my mind. It should back down here in the next 3 days. You can even go back in time and see that, like, this thing's a mover. It can move a lot in a day. So I think 3 days is pretty reasonable if we went from 39 to 42 in a day. You know what I mean? If you look here, 123, look here, 124. So in a day, we went from 39 to 42. So 3 days is more than reasonable for this to drop down to here. So I think it'll take about 3 days. I like to triple that time and get at least triple that time that I think the move's going to play out in on a contract. So I think it's going to take 3 days. So triple that, that's 9. I need at least 9 days. So the 10 days solid, it's fine. And looking at the contract one more time, I like the Greeks, good chance of being in the money, low theta because I have 10 days on here. Delta's good, it's high, which means the contract value increases a lot as it goes my way. 4,495 people in the put, 531 in the call. So way more people in the put than the call by far. So I like that a lot too. That's looking good. 4,500 people in the put, 500 in the call. I mean, this is looking like most people are thinking the same as me. This is going to drop. 378 on the volume. So I really like this contract. The spread's only 4 cents. So yeah, I like this 4150 contract here. The spread's only $4. That's nice. I still have a few minutes to get in here before the market closes. Obviously, I'd like to get in on the low end, which would be 66 if I can. So I want to try to get in at 66. If I can't get filled, then I'm fine getting in at 69. The spread just tightened a little bit too. It was just $4 a minute ago. Now it's $3. But anyway, I'm gonna try to get in on the cheaper side, right? So I want to try to get in at the bid price. So I want to try to get in at $66. Worst case scenario, I'll take $69 on the fill. But let me try to get filled with one contract for $66. Try to get in on the cheap end. So I'm gonna hit buy, hit confirm, and we'll see if that order gets filled. See if I can get filled on the cheap side. Basically, I just go back to the home screen. I go to orders, let it sit for a second. If it doesn't get filled, I go to modify order. I change it. So now instead of 67, I'll make it 68, which is the mid price, right? Go to modify, go to 68. So then I get in at the mid price, right? Which is still solid. I'd be happy with that. And boom, I'm filled. So now I'm in at the mid price. That's perfect. I can see what I'm down, which is 1%, $1 already. But obviously that doesn't mean much on a contract that has 10 days worth of time before it expires. And I'm expecting the move to take 3 days. So there's plenty of time for this to work out, so I'm not tripping at all. So obviously I got filled on that. So now I'm going to come back over to the actual stock. I'm going to see what we got. Looking on a 4-hour chart, looking on a daily, and looking on a 1-hour chart. I'm going to peek at it one more time. It's looking good here. I like this a lot. So back to the 4-hour chart, because that's what I'm actually going to trade on. This is how the trade's laid out. If it goes back to this point, I'm still not stressing because last time it bounced here and went back down. If it goes below this point, I'm going to get out because obviously this is a put. I make money as the price goes down. So if it goes below this point, I'm getting out for a loss. That's the stop loss. And if it goes down to here, I'm getting out for a profit. That's the take profit. So stop loss and take profit are set. I just leave my phone turned up. I'll get alerts that'll go off when it hits one of these zones. And then I'll get out of the trade. I like my stop losses to be manual. I don't like them to be automatic because something goofy could happen. Like one candle could shoot all the way up here, or it could move against me really fast, and that could make the contract go down X%. Like let's say I set this to to get out at 50%. A candle could shoot up real fast to halfway to the stop loss, and because it moved so fast, that could knock me out 50%, when really I want to wait and see if it's going to get past this point. You see what I'm saying? Otherwise, I think it's going to turn around and go my way. So I don't want to automatic stop loss. I want a manual stop loss. It's going to be here, an alert going off that I will hear. When it gets to here, that's where I would get out for the stop loss, and alert here is where I would get out for the take profit. So got my alert set. Now I just have to wait, be patient, give this trade some time to play out, give it a few days. There's 10 days on the contract, so waiting a few days is no problem. So I'm going to give this trade a few days to work out, and then I'll pop back in when I sell, and we'll see how it goes. But I got a good feeling about this one. I think this baby's about to plummet, and I'm about to clean up on this put. But we shall see. We'll see how it goes this week. Hey, so far so good. We're making progress right down to my take profit. Now, granted, I'm keeping an eye on this because, it doesn't have to go exactly to the take profit. That's what I'd prefer to do, because I don't see a point in, like, just taking a certain percentage, because that's not going to work, right? Because, like, for example, if I was to say, well, I'm only taking a 50% loss, and then I'll pull. Well, what if the trade's not invalidated until it goes to this point? So what if it goes to here, but just because of time decay, that's 50% loss, then I pull out, and then it attempts to go here again, fails, and goes all the way back way down where I would have made profit. See, so I'm not pulling out at any X percentage. I'm only pulling out when the chart says the trade's invalidated. I don't care about the percentage, because it could come as far as here back up and then bomb down and even further, and I could make ton of money. So the trade's only invalidated if it comes to here, right? Well, same thing with the take profit, essentially. I'm not going to say, oh, well, it's to here, but I have 100%, so let me take out, or I have 50%, so let me pull out. That wouldn't make sense, because then what? I'm leaving all the money on the table for it to come here? Or if it comes down to here and it's only 60%, am I going to say, well, it's down to where I think it's going to bounce before, because previously it bounced off here and went back up, so this is the danger zone, but I'm only at 60% and I want 100, so I'll just stay in and hope it goes down further till I get my other 40%. Of course not. When it comes to the point where it bounced before, and I think it's highly likely to bounce again, and the trade's pretty much over, or could be over, it's time to get out. So I don't have the luxury of being able to choose a specific percentage for the take profit. I can't say, I'll pull out when it's 100%, because what if it's here and it's not 100? I'm not going to stay in where it's liable to bounce off, so I can only go to here, right? So as far as percentage, I don't really care. I would just get out if it goes to here. That'd be invalidated. If it doesn't go to there, it's not invalidated. It's still going to go down. And as far as the percentage of, that's the stop loss. And as far as percentage of take profit, it's the same thing. I'm not really looking for any specific percent, because I can't demand specific percent. It's just the chart dictates the trade, right? When it gets to here, it's invalidated. When it gets to here, it's validated, and it's time to get out, because it might bounce off this line and go back up. So really, I should just stay in till it hits this line. But at the same time, I do have the freedom to make a judgment call. So if it comes almost all the way to this line and it starts trading sideways, I can say close enough, get out. Or if it comes all the way down to this, almost all the way down to this line, and it turns around and goes back up, starts going back up, I can say that's close enough, I can get out. So I'm not looking for any specific percent. I'm really just looking for the move to be validated or invalidated on the chart. But as it comes closer to my take profit, I can make a judgment call. If it starts stalling and trading sideways and consolidating or going back up, I could say, that's good enough, I'll just pull it. So we'll see what I get. But right now I'm 43% up, 41% up, 28 up. So it's looking good so far. I'm just letting this thing cruise down. I was going to give it a few days, and it's only the next day. So I'm going to let it cruise down a little further. And like I said, if it starts trading sideways or going back up somewhere on its way here, and then maybe I'll pull out, because I'm not looking for any specific percentage, because I can't demand any specific percentage. But really, I'm looking for it to drop down to this line, or at least get close, and then if it looks a little squirrely, then I'll pull out. But for now, I'm just staying in and riding this thing down, and it's looking pretty good so far. Okay, I'm up over 50%. I'm liking this. This is looking good. Alright, so since it's only the next day and I've got a good drop, I'm already almost up 60%, $40. What I'm going to do is move the stop loss, because it doesn't make sense at this point to just potentially let it turn around and go all the way back to here and just not get any money. I might as well get some money. So now I'm taking the stop loss off, because there's no point in letting it go all the way back up to there. So I remove that stop loss. So now what I'll do is I'll put it just a little bit above where it is. Alright, so what I did is I came in and moved my stop loss. I tightened it up because it was up here just below this last touches up top. And I figure, why let it even U-turn and go up that high at this point and lose the money that I did make? So I tightened the stop loss a lot. It's at about 460, so I made the stop loss 470 just to give it 10 cents of wiggle room. So if it goes back up to there, I would pull out and at least be happy with what I got because it's some profit. And also that gives it a little wiggle room, a little breathing room to still continue to the downside. So I tightened the stop loss, but looking at it, I'm up 50% right now. So now I'm thinking about pulling, honestly, just because I'm up a pretty good bit, 50%, $34 up. I'm pretty happy with that. So that's the mid price. Let me try to get ask just for the heck of it. Let's see if I can sell this thing for ask price, because that would be above 50%. It probably won't get filled, but you might as well try. So I'm at the ask price. I'm asking for the high end, but it's not gonna happen. So then I'll creep it down $1 and I'll try just a cent under the high end, right? High end is 104. Let me try 103. There it goes. Boom. So it dropped a hair, you can see, from 40.58 to 40.56, and I got filled at the 103 because that became the bid, and then somebody took it at the bid. But as you can see, at 104, that was 53% up, 36, and I got out for 103, I believe. Let me go confirm that. Let's see what I got out for. I can go over to history. Let's see. I can go over to history, refresh it, hit sell, and then yeah, I got out for 103. So I got out for above 50%, 50 what 104 was 54%, so somewhere between 49 and 54%. So let's say like 52%. I could do the math on it, but something like 52%, just like 50% up, little over 50% up, I got filled. So 103, 50% up. I'm happy with that. So now if I go back to the account, you can see I'm 35% up. If you round, I'm just rounding these numbers. 35% up, about 35% up, about $35 up, and about 135 in the account. So that's solid for the first trade. I like that. And obviously what I could have done is just stick with what I had and have the stop loss at 470, 40.70, and give it a little room to breathe, like 10 cents to breathe. And then if it would have went back up to 40.70, I would have got out then and just took what I could get, which would be like, what, I don't know, 40%, 35%, something like that. So I could have played it like that and then just continued to stay in and see if it made this whole move. But, a couple things. It kind of bottomed out at 40.47 and started going back up. I didn't like the look of that, as you can see here. Kind of seemed like 40.47 was like as far as it wanted to go, and then it kind of turned around. I didn't like that U-turn. And then on top of that, it's just I was happy with 50%, to make 50% on the first trade of the challenge. I was good with that. I would like to make more, but I was completely fine with 50%. So realistically, what I should have done is just kept this stop loss tight right here at 40.70, and if it turned around and went to there, I should have got out for whatever and just been happy to make anything, and that would have gave me some breathing room, some wiggle room to let it keep going down, and I could have stayed in and made more. That's what I probably should have done in hindsight, but to be honest, I'm happy with this. Just to get this 50%, I'm more than happy. So I'm happy just locking in the 50%, and I'm not stressed at all if it makes the rest of this move, fills this gap, because I'm just happy getting my 50% and starting the challenge off right. So, yeah, happy to make 50, happy to do it in one day. So, good deal. I'm happy with this trade. So, jumping in to check on the trade after the market closed, just for the heck of it, you can see I made the right call by getting out. Because granted, it came back down and it's at 40.31 right now. So, probably the move's still on. But this would have hurt my contract, this spike up. Look how huge of a spike up that was. That would have hurt my contract. And it would have stopped me out because look, I had stop loss at the top of these wicks, just above the top of these wicks. I had a stop loss just on the other side of those, and it would have been hit by that. As you can see, it's past that point. So this right here not only would have hurt my contract because it went through the moon instantly, which is against the direction of my put, but also it would have stopped me out. Like, that's the point I would have got out, so I would have got stopped out there. Diving into a smaller chart, if we go to a 5 minute, you can see that the move was actually after the market closed, so I wouldn't have been able to get out anyway, honestly. But that pretty much would have killed me right there, having that spike to the moon right there. That would have been very bad for my contract. So yeah, my contract would have taken a beating had I stayed in with that spike all the way up, which is kind of unusual price activity, honestly, anyway, right? But either way, I made the right call in making the call to get out when I did, because if I would have stayed in, I would have caught that spike in after hours, and that would have really beat up my contract. Even though it went back down, I imagine I would have opened the next day and found a loss because of how hard my contract got beat up, because of the Greeks when it went against me. So yeah, it's a good thing that I pulled out of this. It looks like I pulled out just in time for the contract to take a beating. So sometimes you gotta follow your gut and make a judgment call and just take the money and run.